Hello again, everyone. This is Chris Thomas, one of the mortgage experts. In this video, we'll learn all about down payments. First of all, let's talk about how the down payment amount is determined. There are two main things that go into determining how large the down payment needs to be. First, the type of loan. Is the loan conventional, meaning a non-government loan? Is it an FHA loan, or is it a VA loan? And the second main thing is the type of occupancy. Will the borrower be living in the house as their primary residence, a second home, or as an investment property? Here is a breakdown of the minimum down payment requirements for the different types of loans. For conventional loans, again non-government loans, there are three different requirements. If the property is a primary residence, the minimum down payment is 3%. If it's going to be a second home, then the minimum down payment is 10%, and if the property will be an investment property, then the minimum down payment is 15%. For an FHA loan, only primary residences are allowed, and the minimum down payment is 3.5%. For a VA loan, again, only primary residences are allowed, and there is no down payment at all. It's 100% financing. How does the down payment affect mortgage insurance? For conventional loans, if you have 20% down, then there is no mortgage insurance. If you have less than 20% down, then there is mortgage insurance. For an FHA loan, there will always be mortgage insurance for the first 5 years, regardless of the size of the down payment. And for VA loans, there is never any mortgage insurance. Why would someone want to pay more than the minimum required for the down payment? For conventional loans, the interest rate is cheaper if the down payment is 5% rather than the minimum of 3%. Also, mortgage insurance must be considered. If 3% is given as the down payment, that's the most expensive as far as mortgage insurance goes. If the borrower puts down 5%, it's less expensive. With 10% down, it's even less expensive. With 15% down, it's even less expensive. And with 20% down, there's no mortgage insurance at all. Also, a lower loan amount equals a lower mortgage payment. With FHA loans, the mortgage insurance will be cheaper if the down payment is 5% rather than the minimum of 3.5%. Also, a lower loan amount will equal a lower mortgage payment. Here are some things to consider when deciding how much money to put down. First of all, how much money do you have? If money is tight, it probably makes sense to put the least amount of money down. Another thing to consider is how big a mortgage payment you can afford. The larger the down payment, the cheaper the monthly mortgage payment will be. You also need to consider whether you want to avoid paying mortgage insurance. Remember, if you have 20% down, there is no mortgage insurance with a conventional loan. And the more money you do put down, even if it's less than 20%, the cheaper your mortgage insurance will be. The last thing to consider is how important is it to you to have equity in your house as opposed to cash in the bank. When you're looking for a mortgage, you need an expert. If you're a real estate agent and you've ever had a deal fall apart, it's time to start referring the mortgage experts to your clients. If you're a consumer looking to buy a house or refinance an existing mortgage, you need expert advice. Call us, Chris and Debbie Thomas, the mortgage experts, and you'll get the advice and the mortgage you deserve. If you'd like this tip, check out all the tips on our website. Tell everyone you know about the mortgage experts, and call us with any questions you might have.